Hey everyone, it's Joe. Welcome back to the channel. Today we're diving into the fascinating world of financial systems. You know, those intricate networks that keep our money moving and our economies humming. Now I know what you're thinking. Finance? That sounds about as exciting as watching paint dry. But trust me on this one, guys. Understanding how money works is crucial. Whether you're an aspiring entrepreneur, a seasoned investor, or just someone who wants to manage their money better. So buckle up, because we're about to embark on a wild ride through the world of cash, banks, and the mind-blowing realm of digital currencies. Let's go. Let's start with cash-based economies. These are systems where physical currency is the primary medium of exchange, and they have been around for centuries. Picture this. Two friends meet in a bustling market. The air is filled with the sounds of vendors calling out their wares and the aroma of fresh produce. One has a basket overflowing with juicy red tomatoes, and the other has a freshly baked loaf of bread. The tomatoes are plump and ripe, while the bread is warm and crusty. They barter, they haggle, and finally, they strike a deal. The exchange is lively, with both parties negotiating to get the best value for their goods. The tomatoes are exchanged for the bread, and everyone walks away happy. This simple act of trade is the foundation of a cash-based economy. This, my friends, is the essence of a cash-based economy. A system where goods and services are exchanged directly for physical currency. It's a tangible and immediate form of transaction. Now, cash-based economies might seem like a relic of the past, but they're still prevalent in many parts of the world. In fact, they are the backbone of many local and rural economies. Think about it. Street vendors, local farmers markets, even that cash-only taco truck you love, they all operate on this fundamental principle of direct exchange. It's a system that supports small businesses and local economies. But let's break it down further. What are the advantages of a cash-based economy? Why do so many people still rely on it? Well, for starters, it's incredibly straightforward. There's no need for complex financial instruments or digital platforms. You have the cash, you buy the goods. It's as simple as that. This directness is one of the key strengths of a cash-based system. No need for credit cards, bank accounts, or complicated online transactions. This makes it especially useful in areas with limited access to banking services. This simplicity makes it accessible to everyone, regardless of their financial literacy or access to technology. It's a truly inclusive system. Plus, there's a certain anonymity to cash transactions. This can be a significant advantage for those who value their privacy. No digital footprints, no transaction histories, just a simple exchange between two parties. This can be particularly appealing in a world where digital privacy is increasingly under threat. For some, this privacy is a major perk. It allows for transactions without the need for third-party oversight. However, like any financial system, cash-based economies have their downsides. It's important to consider these as well. Security is a major concern. Carrying large amounts of cash can make you a target for theft or loss. Carrying large amounts of cash can be risky, making you vulnerable to theft or loss. This is a significant drawback that cannot be ignored. And let's not forget the inconvenience. Handling large sums of cash can be cumbersome and impractical. Imagine having to carry around wads of cash for every purchase, especially for big-ticket items. It can be quite a hassle. Talk about a bulky wallet. This can be a real inconvenience in everyday life. But perhaps the biggest drawback of a cash-based economy is its limitations on growth. Without access to banking services, economic expansion can be stunted. Without a banking system to facilitate loans and investments, businesses might struggle to expand, and individuals might find it harder to access credit for things like education or housing. This can limit opportunities for growth and development. So while cash-based economies offer simplicity and anonymity, they also present challenges in terms of security, convenience, and economic growth. It's a trade-off that each society must consider. It's all about weighing the pros and cons. Each system has its strengths and weaknesses, and understanding these can help us make better financial decisions. Now, let's level up to banking systems. These institutions are the backbone of our financial world, playing a crucial role in the economy. Imagine the same two friends, but instead of trading tomatoes for bread, they deposit their earnings into a bank. This simple act is the first step in a complex financial ecosystem. This simple act opens up a world of financial possibilities. Banks don't just store money, they make it work for you and the economy. Banking systems are like the circulatory system of an economy. Just as blood circulates nutrients and oxygen, banks circulate money, ensuring it reaches where it's needed most. They allow money to flow between individuals, businesses and governments, facilitating transactions, savings and investments. This flow is essential for economic stability and growth. Think about it. When you deposit money into a bank, it doesn't just sit there collecting dust. Instead, it becomes part of a larger pool of funds that banks use to generate more wealth. Banks use those deposits to provide loans to individuals and businesses, fueling economic growth. These loans can help start new businesses, buy homes and fund education. They also offer a range of financial services, from checking and savings accounts to credit cards and mortgages, making it easier for us to manage our money and plan for the future. These services are designed to meet the diverse needs of their customers. One of the biggest advantages of banking systems is their ability to safeguard our money. Advanced security measures and insurance policies protect our deposits. Banks are heavily regulated and insured, providing a level of security that's hard to match with cash. Plus, they offer convenience. Regulatory bodies ensure that banks operate within the law, protecting consumers. With online banking and mobile apps, we can access our accounts, make payments and manage our finances with just a few taps on our phones. This digital transformation has made banking more accessible than ever. But banking systems aren't without their critics. Some people believe that banks prioritize profits over people. Some argue that banks hold too much power, influencing interest rates, lending practices, and even government policies. This concentration of power can lead to conflicts of interest. Others point to the fees and charges associated with certain banking services, which can disproportionately impact low-income individuals and communities. These fees can add up, making banking less accessible for some. And let's not forget the potential for financial crises. History has shown us that when banks fail, the consequences can be severe. When banks make risky loans or engage in irresponsible lending practices, it can lead to economic downturns that affect us all. These downturns can result in job losses, foreclosures, and a loss of savings. Despite these challenges, banking systems remain a cornerstone of modern economies, providing essential services that facilitate growth, manage risk, and connect us financially. They are integral to our daily lives, helping us achieve our financial goals and secure our futures. Finally, we arrive at the cutting-edge world of digital currencies. Imagine our friends from the market, but instead of cash or bank transfers, they use their smartphones to transfer payments instantly using Bitcoin, Ethereum, or any other cryptocurrency. This is not just a futuristic concept, it's happening right now, all around the world. Welcome to the future of finance, a world where transactions are seamless, borderless, and instantaneous. Digital currencies, also known as cryptocurrencies, are decentralized digital assets that use cryptography for security. This means they are secure and nearly impossible to counterfeit. Unlike traditional currencies issued by governments, cryptocurrencies operate on decentralized networks, typically blockchains, which are essentially digital ledgers distributed across multiple computers. This decentralization ensures that no single entity has control over the entire network. Now, I know this might sound complex, but the basic idea is pretty simple. Think of it as a digital version of a ledger book, but one that is shared and verified by everyone in the network. Cryptocurrencies allow for peer-to-peer transactions without the need for intermediaries like banks. This means lower fees and faster transaction times. They offer a level of transparency, security, and accessibility that's turning heads in the financial world. Every transaction is recorded on the blockchain, making it transparent and traceable. One of the most appealing aspects of digital currencies is their potential to bank the unbanked. This means providing financial services to those who have been excluded from the traditional banking system. In many parts of the world, People lack access to traditional banking services due to economic inequality, geographical limitations, or political instability. Digital currencies can bridge this gap. Cryptocurrencies, with their decentralized nature and global reach, offer a viable alternative, empowering individuals and communities with financial inclusion. This can lead to greater economic stability and growth in underserved regions. But it's not all sunshine and rainbows in the world of digital currencies. There are significant challenges and risks that need to be addressed. Volatility is a major concern. The value of cryptocurrencies can fluctuate wildly, making them a risky investment for those not prepared for the ups and downs. The value of cryptocurrencies can fluctuate wildly, making them a risky investment. Regulation is another challenge. Governments around the world are still figuring out how to regulate this new asset class. As governments grapple with how to regulate this emerging asset class, uncertainty looms large, creating both opportunities and potential pitfalls. The regulatory landscape is constantly evolving. And let's not forget the environmental impact. Mining certain cryptocurrencies requires massive amounts of energy, raising concerns about their carbon footprint and sustainability. Mining certain cryptocurrencies requires massive amounts of energy, raising concerns about their carbon footprint. This has led to a push for more sustainable and energy-efficient mining practices. Despite these challenges, the world of digital currencies is brimming with innovation and potential. New solutions and technologies are being developed to address these issues. From decentralized finance, DeFi, to non-fungible tokens, NFTs, the applications of blockchain technology are expanding rapidly, transforming industries and challenging traditional financial systems. The future of money is indeed digital, and it's evolving faster than ever. And there you have it. From cash-based economies relying on old-school transactions to sophisticated banking systems that manage our finances, and finally to the exciting evolution of digital currencies, each system has its unique pros and cons. Understanding these financial systems helps us navigate our economic environment confidently. Whether you prefer the tactile feel of cash or the speed of digital payments, the world of finance has something for everyone. Like, subscribe, and join us for more financial adventures.